सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The government recently released first advanced estimates of GDP, and these estimates tell us that GDP this year will grow around 7%, which is lower than last year's 8.7%. But all is not bad news, and that is what we will discuss today in this episode of Macro Sutra. I am Yuthika, Bhargava, Associate Editor with ThePrint, and we have with us Radhika Pandey, who is Senior Fellow at NIPFP. She will help us understand the data. Hi Radhika.
Hi.
We will start with what are these advanced estimates and why are they useful?
So, as you rightly mentioned, the government on 6th of January released the first advance estimates. What happens is that for each GDP number of each year, the government releases 6 iterations or 6 releases. So, this is the first estimate of the current financial year. It gives us some indication of the level of GDP growth in this year, though it is not based on the full year data because the year is still not over. The year will get over on 31st March. So this is why it is called advance estimate, because it is based on data of first 7 to 8 months. So that is why it is called advance estimate. But it is necessary to release it at this point in time because we know that we have budget next month, and budget needs some number or some estimate of GDP to serve as a base to make projections for next year. Okay. So we need to have some measure of GDP for 2022-23 to make projections for 23-24. So that is why it serves as a useful input in budget projections for the next financial year, though it is not based on the full 12 months data. It is based on first 7-8 months data, and then there are some projections and extrapolations done. That is why it is called advance estimate. And we have 2 advance estimates. We will have another advance estimate which will be released on 28th of February. So these are the 2 advance estimates, and then we have what is called provisional estimate, which is released on 31st of May, which is like the first 12 months of data is captured in the provisional estimate. And then we have what is called revised estimates, which will come next year. Then we have another revised estimate which will come next to next year, and then we have another one which will come or the third year. So overall, for each year's GDP, what is important for us to know is that we have 6 releases spread over a period of 2 years and 7 to 8 months.
Okay, but how much do these estimates vary?
They vary a lot. So if we look at the revisions, so each year, if we see, we look at the numbers of 2017-18 or 18-19, we see variations. Sometimes there is overestimation, sometimes there is underestimation. There is no distinct trend. We can't say that, on February when we'll have new number, it will be 8%. There is no distinct trend. It may be underestimated. The margin of variation may be small, the margin of variation may be large, but yes, there are revisions and they are bound to happen because, your data source and your the data sources change because as you have more number of months, so you have a better coverage. So the numbers are bound to change, and from provisional to revised estimates, the sources of data also change because we move to looking at just, monthly proxies. Like for GDP manufacturing, we look at IIP manufacturing in the initial estimate. But as we move forward, we also get company level data. So that is possible only in the revised estimates. So revisions are bound to happen because as we move forward, as we move from advanced to provisional to revised estimates, the data sources change.
Okay. You also mentioned budget, and we have an audience question on that also, that how important are these numbers for budget? Aren't policies already in place? Government already knows that what they want to announce in budget, or these estimates have a major role to play?
They do have a role to play. They serve as a guidepost because we need some number for the current financial year to serve as the base for the next financial year to make, because what is important is to make some assumption of nominal GDP growth. Because when you talk about things like fiscal deficit to GDP ratio is going to be 6.4% or 5.9% next year, what people are thinking about. So you need to have some denominator. You need to have some number for GDP. And that comes only if you have some number for the current year. Then only you can make some assumptions over and above that for the next financial year. Okay. So in that respect, it does help in making budget projections about nominal GDP, about tax projections, and so on. So for fiscal projections, these numbers do serve as an essential guidepost, though it is important again to remember that not always the budget uses the advance estimates. Sometimes the Ministry of Finance comes up with its own estimate of GDP. So it has also happened that way also, that this is a number which is released by the Ministry of Statistics and Program Implementation. But when the Ministry of Finance comes up with its numbers, that GDP estimate for the current year is different from the advance estimates released by the Ministry of Statistics and Program Implementation.
Okay. Radhika, our estimate is 7% growth, but World Bank has 6.9%, IMF and RBI have 6.8%. So how do these numbers compare, and what are the different set of data that these organizations use?
Yeah, so they have their own models, they have their own assumptions. So it is bound to vary, but for the number that is released by MOSPI, the Ministry of Statistics and Program Implementation, the 7% number, for that at least we know what are the variables that go into the estimation process. Because that the procedure, we know that what all variables are used in the estimation of overall GDP as well as sectoral GDP. So there are some sectors which are doing very well and therefore they pull the GDP up. There are some sectors which have not done well, which pull the GDP down. So based on our assumptions about our projections about the various drivers, the components of GDP, the overall estimate of GDP is decided, or it is inferred. But for this number, we actually know what have been the hits and misses. Whereas, World Bank or Reserve Bank of India, they have come up with an overall number. But here we also know the sectoral trends, both from the point of view of economic activity as well as from the expenditure side.
Okay, so for our 7% estimate this time, which are the sectors that have done well and which are the sectors which have not performed well?
Yeah, so the sector that has done well are the services sector. The services sector, namely the trade, hotel, transport, they have posted a growth of 13.7%, which is a good number, which shows that there has been a pent-up demand, because last 2 years we saw services sector were adversely impacted by COVID, and therefore we see a impressive rebound in services sector. Also consumption from the expenditure side, if we talk about first the positive aspects of the GDP number, consumption has done well, both in terms of the growth rate as well as the share of consumption in the overall GDP. It has done well, though it is, what is important to note is that it is uneven. The urban consumption has done well, but if we look at the rural consumption, there are still some indicators that show that rural consumption is muted. For example, if we look at two-wheeler sales, that has remained muted. So it shows that with inflation, rural consumption has been adversely impacted. With global uncertainty, monetary policy tightening, rural consumption has been impacted. But overall, if we look at the broad number, its consumption has posted a growth of 7.7%, which is reasonable, and also in terms of share. Another element that has done well is the investment, which is proxied by gross fixed capital formation. It has shown a growth of 11.5%. Again, on a high base of last year, it's a good number. But again, the composition matters. We can see that, one of the main drivers of investment is government investment, but there are some green shoots of recovery also seen in private investment. If we look at the recent CMI capex data, which shows, which monitors the new projects that are announced, projects that are under implementation, we do see some traction happening there. New projects announced, particularly in the manufacturing sector, has seen a record jump in the December quarter. So that means at least there is an intent. People are announcing projects. They do see some green shoots. They do see some demand revival. They do see some favorable impact. That is why they are investing. So those are some of the positive elements. The sector that has not done well is the manufacturing sector, because from last year to this year, we have seen a deceleration of 1.6%. So that is a cause of concern. But here also, again, very important is to note that the output, the volume of production is not bad, because if we look at the index of industrial production, which is telling us about the volume of production, that is not bad because it has shown a growth of 5%. What is problematic is that, the manufacturing sector firms' profits have been impacted because of high input cost pressure and also because of high interest costs. So all these are going into the cost of production and squeezing their profit margins, and therefore manufacturing sector value addition is not doing well. But in terms of the output, we are doing fine. So that manufacturing sector is primarily impacted by global headwinds and input cost pressures. But going forward, now we see that commodity prices are slightly moderating. So we should see a revival in the manufacturing sector, and that is what we see if we look at the second half of manufacturing sector growth. We can calculate, because you have the full year data and you have the first half, so you can actually calculate what is going to happen in the second half, and we do see some revival in the manufacturing sector performance in the second half.
Is there any trend on what has been driving growth for us, services versus manufacturing? Is there a larger trend?
Trend is that, till 2019-20, manufacturing sector was doing well. But since 2019-20, we have seen structurally there are some problems in the manufacturing sector. So while COVID and then disruptions due to Russia-Ukraine war, we have seen manufacturing sector impacted. But we should also note that in 2019-20, the pre-COVID year also manufacturing sector did not do well. So there are some issues that need to be addressed in the manufacturing sector in terms of efficiency, because manufacturing sector is one of the labor intensive sectors and it needs to be seen. But the services sector has been the driver, and that can also be seen in terms of their share in GDP, which it has been rising. But only during the last 2 years we saw services sector was the most adversely impacted by COVID, and therefore that is the sector that is going to take the maximum time in reaching the pre-COVID levels.
Okay. I'll take some questions from audience now. So largely everybody is concerned about manufacturing in India. And so Sankalp asks that IMF Deputy MD called India a bright spot and said, and I quote, India needs to leverage its existing strength in services exports and extend it to job-rich manufacturing exports. Policymakers did go big on Make in India, but along with that, we also need market. So why are our FTAs stuck and what is happening there?
So it would be inappropriate to say that FTAs are stuck, because at least we are, making some progress there. There was one FTA that we did not sign, the RCEP deal, and that had, considerations beyond economic consideration due to China factor and due to the fact that, our trade deficit will widen further. We did not sign the RCEP deal. But on the other FTAs, we are making progress, though it is slow, because there are a lot of things that need to be analyzed in an FTA, and we need to also learn lessons from the previous FTAs, because for example, FTAs that have been signed with ASEAN countries, we have seen that post the signing of FTAs, our trade deficit has increased. So the government needs to take on board the interests of the stakeholders and look at what is going to happen to trade deficit, then what is happening in other countries. There may be some concerns of the other countries, that the other trading partner that also also needs to be addressed. So we are making progress, but yes, it is slow. But at least in the last 4-5 years, there is some traction happening on FTAs. So we should see some developments in the coming year.
Okay. Anshul has a couple of questions actually. First is, why are efforts like PLI are not giving us required results in manufacturing?
PLI was started in 13, 14 sectors, and there, particularly in electronics and for example, for Apple, we do see investments happening. We do see improvement in exports. What is important now is to, as also rightly pointed out, that, we should move away from just a couple of sectors to more labor-intensive sectors, and also revisit the thresholds that we have sought from these sectors. What is the criteria? Are we only looking at whether these sectors are going to export, or we should also take into account some other criteria, like whether they are giving some importance to employment generation or to value addition. And there, now we see that, there are going to be PLIs in other labor-intensive sectors like leather, like toys, so like textiles, we already have a PLI. So there is a need to extend, firstly, understand the PLI, what are the shortcomings of PLI scheme, revisit the threshold criteria, revisit the variable, whether it should be just investment and exports, or should it also include things like contribution to employment or value addition, and look at labor-intensive sectors. And there we do see progress happening. The government has already announced that they're going to have a PLI for the toy sector. 3,500 crore PLI is expected for the toy sector. So if we have more production-linked incentive schemes for labor-intensive sectors, that would be helpful.
Another interesting question that he asks is the role of states actually. Why aren't economically backward states like UP and Bihar putting in extra efforts to invite manufacturing so that, especially for low skilled workers?
Yeah, so particularly if we look at Uttar Pradesh, what we see is that, it's going to organize something called an investor summit, global investor summit in 2023, I think next month or next to next month. And for that, they are making efforts towards attracting investments. They did some road shows on, talking about the investment potential of the state. And we do see investments coming in. There have been some MOUs signed with some of the infrastructure firms, logistic firms in other countries. So at least in Uttar Pradesh, we do see progress being made on the investment front. Also, there is a very important indicator, the ease of doing business rankings, which are ranked states on the basis of what kind of reforms have been undertaken by these states. And there also, it's called the Business Reform Action Plan. Recently the rankings were released, and Uttar Pradesh features as an achiever state. So there is something called their top ranked states, which are called top achievers, and then there are achiever states, and there Uttar Pradesh, UP does feature. So in UP, we are seeing visible efforts towards investment generation. That is also visible if we look at the amount that they have budgeted for capital expenditure. Uttar Pradesh is the state for this financial year. They have budgeted the maximum amount for capex in this financial year. So all in all, we should see progress. And after this Global Investor Summit that is happening in Lucknow, we should see more investment proposals, more intent, more MOUs being signed on the investment front. So that is for Uttar Pradesh. Even in Bihar, we see what they have done. They have taken some initiatives towards attracting investment. But structurally, what we need to remember is that these are primarily agricultural states, and to set up industries, they also need forward and backward linkages, which is not easy in the initial phase. So it will take time to, even when you set up industries, you will need to have forward and backward linkages. So that takes time, but we do see some traction efforts happening in these two states, definitely.
Going back to the advanced estimates, would it be fair to say that if manufacturing would have done well, we could have surpassed the 7% and even touch 8%? Or would global certain uncertainties would have made it impossible still?
So what we see, the disappointing performance of manufacturing is due to global factors because of higher input cost pressures on the one side and weak external demand on the other side. So these are the two factors that have contributed towards slowdown in the manufacturing sector. So had these headwinds been not been there, in hindsight, we could see that at least GDP performance would have been better, other sectors remaining constant. So the biggest drag this time around has been the manufacturing sector, because all the other sectors have comparatively done better. So yes, GDP could have been 8%, but the fact is that we know for sure that manufacturing sector has been impacted due to higher input cost pressures, due to global headwinds, and that is visible because if you look at, as I said, production volumes are not a problem. Even now, with all these challenges, the index of industrial production is 5%. The problem lies when this output is to be sold. The cost pressures are escalating because of higher costs and because of lower external demand. So the profits are getting squeezed. So that is a direct implication of global headwinds.
And going back to services, do you think there are certain uncertainties there going forward, since it is the main driver for the growth estimates this time? We are seeing resurgence of COVID in China. Do you think there could be a likely impact on especially high-touch service sector?
Yes, so till now services sector are doing well, but there could be challenges, there could be disruptions due to the resurgence of COVID and also what is happening in other countries. We are seeing the threat of recession looming large in US, in EU, in UK. So if there is recession, if recession actually happens and if there is a sustained slowdown in global demand, then our services exports would be impacted, and that will have a impact on services sector performance also. So yes, there are challenges going forward. What needs to be seen is what is the state of recession. For US, there are mixed signals, but for UK and EU, definitely there are definite signs of recession. So all these will shape the trajectory, the performance of services sector in the coming months.
Radhika, nominal GDP has been pegged at 15.4% for the current fiscal, and it was 11% as estimated in budget 2022. So what impact does this have on fiscal deficit?
Again, these are again problems of revision that we spoke about, because in the budget, the nominal GDP of the current year was estimated at 11%, and based on that, all the assumptions about 6.4% fiscal deficit were made, and now the estimation of nominal GDP is 15.4%. Therefore, our denominator becomes more. That gives more headroom to the government to spend more and still keep the fiscal deficit to GDP ratio at 6.4%. So that way the government is getting greater space to incur additional maybe capital expenditure or on subsidies. They are getting an additional space of almost 97,000 crore because of the fact that your denominator is now bigger. Therefore, you can have fiscal deficit also concomitantly bigger to have a 6.4% fiscal deficit to GDP ratio. So yes, that kind of fiscal space is being accorded to the government because of the nominal GDP rising to 15%.
Okay. On that positive note, looking forward to more government investments, we come to the end of today's episode. Please join us next week again.